Thank you very much, Kelsey. So hello, everyone, and thank you for being present at this second edition of Morocco Market Insight, intended for foreign investors and hosted by the experts from BMC Capital Global Research and BMC Capital Bourse. So during this session, we will address the main economic trends, our vision of the Moroccan stock market, and the key factors that could influence it in 224. So we'll present the investment strategy upon which we have based the building of our BKGR portfolio, and after do a focus on our topics. So we'll conclude this webinar, like said Kesley, with the usual Q&A session. So feel free to ask your question via the chat provided for this purpose from now on. So without delay, I hand over to Khadija to open this presentation.
Thank you, Dunya. So before presenting our portfolio for the current year, we are going to review the main macroeconomic points for 2023 and 2024. So in terms of economy, Morocco has once again confirmed its resilience with an improvement in growth to 3.3% in Q4. In terms of projections, the central bank is expecting a growth of 2.7% in 2023. As for 2024, the country's economic activity should gradually improve to 3.2%, assuming a return to an average cereal production of 70 million quintals. However, this level seems a bit optimistic given current rainfall conditions. With regard to inflation and following its 40-year peak of 10.1% at the end of February, the change in the CPI has been on a downward trend, settling at 3.6% at the end of November 2023. So this easing of inflationary pressures is mainly the result of the slowdown in food and manufactured goods prices, as well as the three key rate hikes which were carried out by the central bank between September 2022 and March 2023 for a total of 150 bips to 3%. So the central bank expects inflation to slow down to 6.1% in 2023. However, the gradual decompensation of butane gas from Q2 2024 could lead to an indirect inflation. Moving on to slide 4, which presents our economic scenario. So in the light of these elements, we have maintained our economic scenario for 2024, anticipating in its central components an increase of 3.6%. And for risk mapping on slide 5, we have done the same, with the main opportunities being the co-hosting of the 2030 World Cup, the consolidation of the tourism business, and the dynamism of exports. And on the risk side, we have the likelihood of a poor agricultural season due to the current climatic conditions. We also have the rise in oil and food prices and the drop in phosphate exports. So let's move on to the market section. The Casablanca Stock Exchange closed the year with a remarkable performance of 12.8%, making up for the losses recorded a year earlier. So in detail, after the spectacular rise in interest rates at the beginning of January, investors retreated from their positions at the start of the year while waiting for more visibility. However, fortunately, a number of positive factors helped to reverse this trend, including the first signs of a slowdown in inflation at both national and international levels. We also have Morocco's successful international issuance of $2.5 billion in March 2023, which confirmed the kingdom's creditworthiness. And we also have better than expected annual results for companies, testifying to the resilience of stocks listed on the Casablanca Stock Exchange. So this uptrend signals the start of an expected recovery, capitalizing on different announcements, such as the co-hosting of the World Cup, triple status quo for the central bank, and excitement surrounding CFG Bank's IPO, which gained 42%. As for the volume, so the global volume traded in the Moroccan stock market rose slightly to 53 billion dirhams during 2023. So this situation is due to two main elements. The first one is the rise of 3% in volumes traded on the central market, which was offset by the drop of 3% in the OTC market. Let's move on to the regional and international peers in terms of stock market indicators. So as you can see on the projected graphs, the Casablanca Stock Exchange has the second highest PE after Saudi Arabia. Before moving on to the investment strategy for 2024, let's take a quick look at the performance of our previous portfolio in 2023. So as you can see on the graph and over the year, the BKGR portfolio gained 16.9%, slightly outperforming the Madi RB, which posted an annual rise of 16.4%. So it should be noted that our stock selection benefits from the insight of the initial strategy that we adopted, but also from the changes that were made over the months, depending on current market opportunities. So moving on to the catalysts of the equities market in 2024. As we have already discussed the economic growth part earlier, I'm going straight to the 2024 finance bill. So a number of measures should be installed to boost the Moroccan economy, including the implementation of direct social assistance to help boost domestic consumption, and also the launch of housing assistance to help boost the real estate and construction materials market. However, as I said earlier, the gradual decompensation of butane gas starting from Q2 2024 could lead to an indirect inflation. In terms of earnings, we expect our Scope's net income group share to rise by 14% in 2023 and by 11% in 2024, driven by interesting opportunities to be seized, such as the World Cup, the reconstruction plan, and also the signing of several cooperation agreements with the UAE. We also have the positive base effect in 2024 due to the non-recurrence of the earthquake grant. Concerning the bond market, the bond stock spread is expected to shrink in 2024, given the likely easing of the monetary policy, leading to a drop in interest rates. So speaking of the bond market, we have drawn up a comparative equity bond matrix. So there are a number of advantages, opportunities for the equity market. First of all, we have a drop in the risk premium and the risk-free rate, likely leading to an upward revision of the valuation levels of listed companies. We also have a potential upside. We believe that the Casablanca Stock Exchange still has a growth potential of between 5 and 10%. We also have a return of risk appetite and optimism in the market, and a reduction in the 10-year T-bonds versus dividend yield spread, which of course is in favor of the equities market. However, it should be noted that the 2024 market PE is likely to be less attractive than in 2023, prompting the implementation of a stock picking strategy. As for the advantages linked to the bond market, we have, as you may know, predictable returns, low risk, the expected easing of monetary policy over the next 12 to 18 months, which could lead to an increase in the valuation of bond portfolios if the key interest rate is cut. And as a threat, we have lower returns compared to an efficient equity portfolio. So we also did the target forward PE ratio simulation to measure the potential for growth or decline on the Moroccan equity market. So taking into account an expected increase in earnings capacity of 14% and the historical high and low in terms of PE, the evolution of the Casablanca Stock Exchange should range between minus 13.5% and plus 24%. So taking all of these factors into account, we have built a portfolio with the objective of striking the right balance between prudence and calculated risk-taking. So the composition of our portfolio in 2024 is based on layers, which enable us to define categories of stocks, each with its own characteristics. So first of all, we have a solid base of defensive stocks, to secure and reduce risk, representing 60% of our portfolio, and which can be classified according to three layers. So the first layer is sustainable. So these are the stocks with predictable income and low volatility, which generally have leadership status or strong competitive position. So we chose for this layer Tijari Wafa Bank, Taqa Morocco, Cozumar, and Mutandis. We also have the robust layer, stocks with solid fundamentals such as Marsa Maroc, BCP, Crédit du Maroc, and Atlanta Sanad. And finally, we have the super yield layer, which are the yield-oriented stocks such as Sonacid and Ciment du Maroc. We also have a pocket of offensive and semi-defensive values, representing 40% of our portfolio, and these stocks are capable of generating performance, and we can classify them according to two layers. So we have the first layer, which is value, so it's the stocks that are currently undervalued and have considerable scope for recovery, such as Agdital, Maroc Telecom, TGCC, Arade, and SNEP. And we have the final layer, which is growth. So these are the stocks that offer significant growth potential over the market average, such as ASPES. So for 2024, the BKGR portfolio offers an attractive growth potential of 9% for PE of 17.6 times in 2024 and the dividend yield of 3.5%. So up until now, our portfolio gained 7.1%, outperforming the MASI, which posted a rise of 5.4%. And also, it should be noted that the majority of listed companies should benefit from the upward revision of their valuations in the wake of the drop in risk-free rates and the risk premium, as I said before. So that's it for the macroeconomic and strategy part. Dunya, back to you.
Thank you, Khadija, for your explanation. So we will now move on the topics. So today we have decided to present 4 stocks that are currently in our portfolio. We'll start with the first Moroccan bank, Tijari Wafa Bank, which Iman will present to you. So Iman, you can take the floor.
Thank you, Dunya. Hello, everyone. So let's now turn our attention to Tijari Wafa Bank, a stock on which we hold a very positive outlook due to its strengths and growth prospects. Tijari is part of the defensive stocks in our portfolio, given its sustainable profile. The bank is a leader in its sector in terms of distribution, with a market share of nearly 30.3% at the end of the first half of 2023. So this positioning is supported by robust fundamentals reflected in a consolidated capital adequacy ratio of 12.58% and a Tier 1 ratio of 11.29%. The bank is also actively reinforcing its regulatory ratios, including the issuance of contingent convertibles in 2023, amounting to 2 billion dirhams. So this move is expected to stimulate its commercial activity and absorb the impacts of various regulatory and accounting changes that may affect the sector as a whole. So in terms of risk management, the bank maintains a substantial provision buffer, including general provision of 3 billion dirhams on a parent company basis and an outstanding impairments of 30.2 billion dirhams on a consolidated basis at the end of the first half of 2023. So this proactive approach enables the bank to withstand the possibility of an economic downturn. On another note, the bank capitalizes on its presence in Africa through its subsidiaries, with the international banking contribution standing at 36% in the first half of 2023, up from 34.2% a year earlier. So this presence allows it to offset any potential decline in activity in Morocco. However, in terms of warnings, there is a possibility that the diminishing potential for interest margin growth due to the increase in the policy rates may slow down the progression of the net banking income in 2024. Regarding the cost of risk, a deterioration in the quality of the portfolio in Morocco and Africa could lead to an increase in the cost of risk. So on the stock market front, the stock is currently trading at 485 dirhams, representing a year-on-year performance of 32%. Its price-to-earnings ratio in 2023, according to our forecasts and based on the current price, is expected to be at 14.7 times. So in terms of forecasts, we project a compound annual growth rate of 7% for net income group share between 2023 and 2027, incorporating an appreciation of 11% in 2023 to mitigate the expected increase in general operating expenses and cost of risk, and 13% growth in 2024. So this trajectory is expected to be driven by the persistence of a margin in terms of the transmission of the key rates increase and an anticipated robust performance in financial markets, improving a recovery income from market activities. So taking all these factors into account, we arrive at a target price of 500 dirhams, representing an upside of 3% compared to the current market price. Hence, our recommendation is to accumulate this stock. So that will be all for Tijari. I will leave the floor to Dunya.
Thank you again, Iman, for all the explanation about Tijari. So I'm going to let now Ptissam present you the leader of the telecom in Morocco, Itfat Al Maghreb.
Hello, everyone. So let's move on to Maroc Telecom, the Casablanca Stock Exchange's second largest market capitalization. So it's a stock that we are reintegrating into our portfolio as a semi-defensive value profile that could benefit from a significant recovery potential, although this depends on the outcome of the current legal case. So before discussing the risks to take into consideration, we will start by highlighting the drivers that support our opinion today. So first of all, Maroc Telecom has maintained its position as Morocco's telecommunications leader despite strong competition and the slowdown in market shares in its various business segments. The group has a strong cash generation capacity thanks to its control of operation costs, allowing it to stabilize its margins at comfortable levels. It's also important to mention that penetration of African markets offers interesting opportunities for international development with the continued growth of Move Africa subsidiaries, which now accounts for almost half of sales. The sector as a whole should benefit from the growth of the internet market, which is set to continue its growth in the coming years, given the increase in digitalization of Moroccan society and the intensification of investment in fiber optics. I would like also to highlight the expected arrival of 5G technology, which should usher in a new cycle of growth for the sector. Indeed, the co-hosting of the 2030 World Cup would accelerate the deployment of this long-awaited technology to ensure good coverage of the event and a level of service in line with expectations. So in terms of threats, the major risk to consider is the legal and regulatory risk. I would like first to point out that a memorandum of understanding has already been signed closing the case concerning the Malian subsidiary, and its impact has been fully integrated into accounts at end of June 2023. On the other hand, the complaint lodged by WANA concerning unbundling is still pending with a claim for damages of 6.85 billion dirhams. It should be noted that the Rabat Commercial Court has set a deadline of January 29 for the case to be deliberated. So by the end of this month, investors would have more visibility on the outcome of this case. So if WANA's complaint is upheld, this could have a major impact on the operator's net income. However, if the decision is in favor of Maroc Telecom, investors should take advantage of a significant recovery potential with a return to more normative levels around 130 to 140 dirhams per share. If we take a look at the company's price-earning ratio, it stands at an attractive level of 16.1 times versus 20 times for the market, which could offer a very interesting investment opportunity. As for the current price, the stock trades today at a level of 105 dirhams per share, with a year-to-date performance of almost 6%. So in terms of forecasts for 2024, we expect continued growth for the Move Africa subsidiaries, considering the good performance of the mobile data and mobile money segments, which should compensate for the continued loss of market share in the mobile segment in Morocco and increase revenues by 1.3% to 37 billion. In terms of net income, the operator is expected to register a 6.6% increase in its bottom line, considering the non-recurrence of the donation to the special fund for managing the effects of the earthquake for an amount of 700 million dirhams. So to conclude, for our valuation, we recommend keeping the stock in portfolios with a target price of 102 dirhams per share. So that would be all for Maroc Telecom. Now let's move on to the next stocks with Dunya.
Thank you again, Ptissam, for this presentation. So I will let the floor to Wim to present us the last two stocks on the agenda, Sonacid and Agdital.
Thank you, Dunya. So hello, everyone. So let's start our discussion with Agdital and the healthcare sector, where Agdital is really set for optimistic growth thanks to a variety of factors that we will try to clarify subsequently. First of all, I wanted to keep in mind that Agdital is a leading private healthcare provider in Morocco, offering a diverse range of services and having a significant presence across the country. There are like 21 facilities in 6 cities by the end of June 2023, setting the operator's bed capacity to like 2,192 beds. And according to the management, some of these entities are like already achieving occupancy rates of around 60%. So you should also know that the group's intention to continue its expansion with the opening of like 10 facilities in 2024, including a planned structure in 2025 in the city of Dakhla, which will really enable it to increase its capacity to like 3,000 beds. And to accelerate these developments, as you can see on the slide, the leading operator Agdital can rely on a strategic partnership with major players in the real estate sector in Morocco, like for example Aradi, and position itself in the wellness segment, which really could represent an interesting growth relay with higher profit margins. I would like also to, and it's essential, I think, to emphasize the fact that the Moroccan healthcare sector is strengthening during these past years. Indeed, we note an important expansion of the medical coverage with the increase of the number of AMO beneficiaries to like 23 million people by the end of July. Before, in December 2020, it was like 7.8 million. And besides this, there is also the fact that to revitalize the sector and to revive the sector, the Ministry of Health and World Health Organization are like setting a cooperation strategy for the period going from 2023 to 2027, really to structure the sector around the generalization of universal health coverage and strengthening the national system and supporting the reform of sectoral governance. In a second phase, I would like to point out the fact that the group also, Agdital, plans to expand internationally starting from the year 2025-2026 to conquer markets like the United Arab Emirates. The focus will really be on the niche within the middle class population that doesn't always, and that's according to the management, doesn't always have access to healthcare due to high costs there. And the group is also targeting African countries like Senegal and Cote d'Ivoire, and it must be noted, and always according to the management, it must be noted that political instability in several countries, African countries, and the lack actually of local resources such as the absence of a transfusion center in Cameroon, for example, are less encouraging factors for the management to implement their structures there. So on the stock markets, the share Agdital is currently trading at a price of 561 dirhams, Moroccan dirhams. In terms of financial forecasts, Agdital is expected to record higher sales in 2023, up by like 78% to 1,841 million dirhams, driven by two elements. First, the solid performance of the historical entities and the success, of course, of the OPNET institutions in 2022 and 2023. And in terms of NIGs, we expect an increase of 8.9% to 163 million Moroccan dirhams, setting the margin to 8.9. For the valuation of Agdital, we have used the DCF with like the same assumptions that were presented by my colleagues, leading to a discount rate of 10.84%. In terms of warnings, we're not dismissing the fact that the risk of possible legal prosecution for medical malpractices and the potential disturbance of the supply chain due to high dependence on imported medical devices are to stress. Given all these factors, our target price is like around 550 dirhams, a downside of -2% compared with the current price, leading to our recommendation to accumulate the stock on your portfolio. Let's move now to the Dunya, please, to the second stock, so Sonacid. And let's move this time to the construction sector, which appears to have really an optimistic growth forecast due to a number of factors. Attached first toward number one multinational steel manufacturing corporation, ArcelorMittal, Sonacid is really a national major player in the steel industry with an estimated market share of around 40%. You have to keep in mind that the group is Morocco's leading producer of concrete, ring, and wire rod for the construction and industrial sectors, with a capacity exceeding 650,000 tons per year of concrete, ring, and wire rod for the Nador rolling mill, and over 500,000 tons per year for the Georges Lasfar steel complex. Secondly, our conviction to invest in Sonacid is based on the fact that it's positioned in creating high value added projects, and it's among their diversification strategy. The steelmaker launched actually in 2023 the green steel fiber, the first high value added product derived from wire rod with a production capacity of 20,000 tons per year. This product was basically intended to be exported up to 80%, but until today, the green steel fiber has been delivered like to factories under construction in Morocco's industrial zones. It has been also delivered to major shipments in South Africa and to the Paris metro project. And according to the management, I would like to say that the steel fiber is really highly appealing the market and the local market for many reasons, for the fact that it's serving for the infrastructure projects, tunneling, buildings, and flooring, as it enables actually material savings. It enables also a significant reduction in the number of site workers, and it enables also shorter construction time and optimization of on-site operations. Moreover, Sonacid plans also to launch pre-stressed steel in 2024 and automotive steel in partnership with the Moroccan players in this sector by 2025, with an initial investment, according to the management, estimated around 100 million Moroccan dirhams. So in addition to this, I would like to highlight also the fact that there is a lot of opportunities among the Moroccan construction sector. On one side, it is expected to revive on 2024 and 2025 following the implementation in January of the direct housing incentives to stimulate the real estate demand. And just to let you know, according to the most recent data, a significant enthusiasm was registered with a total of like 16,000 applications, more than 60,000 applications since the launch of this digital platform for direct housing assistance. On the other side, there is also the fact that there is really a dynamism that is expected due to the announcement of the organization of the 2030 World Cup, which is really expected to require a significant increase in sports, in hotels, in airports, and in road infrastructure in the kingdom. And in this path, let's note the fact that an increase is planned in the import duty quota from 2.5 and 10% to 17.5% for the hot rolled and cold rolled sheet, clad or coated, to protect actually the Moroccan operators in the Moroccan steel and industry. So lastly, it is essential really to stress on the fact that the cost optimization of Sonacid through an expected improvement in the energy mix, resulting in the use of like 85% wind power and a desire to replace the fuel oil with the 20% natural gas in the coming years. With Sonacid on the stock market this time, the share is currently traded at a price of 732 Moroccan dirhams. In terms of financial forecast this time, it's expected to record sales down slightly by like 0.3%, and impacted by two factors: the deterioration first in international market conditions in 2023 and the slowdown in the domestic construction sector. We expect earnings of around 73 million dirhams versus 86 in 2022, setting the net margin at 1.5%. And for the valuation of the value, always using our DCF method with the same assumptions and a discount rate of 9 point, which leads to a discount rate of like 9.7%. Finally, in terms of warnings for Sonacid, we are not dismissing the fact that the exposure to volatility in steel and scrap metal prices on an international scale, and also a persistence of the informal practices among some operators in the sector regarding the supply of scrap metal. So given all these factors, our target price is 736 Moroccan dirhams, an upside of 0.5% compared with the current price, which is leading us to tell you to accumulate this stock on your portfolios. Thank you so much, and I give back the floor to Dunya.
Thank you everyone. So we are going to pass to the Q&A session. The panelists are here to answer to your question. So we already have a first question. It's about the economy. So it's for Khadija, I think. So the question is, what should be the impact of the rainfall deficit on economic growth forecast for 2020 and 24? Thank you, Khadija.
Thank you, Dunya. So first of all, it should be noted that the Moroccan economy is highly dependent of the agriculture, which represents between 10 and 15% of the GDP, but feeds nearly 40% of the population. So considering the importance of this sector, there could be a negative impact of between 0.7 and 1 point in a median scenario, assuming a cereal harvest of between 35 and 50 million quintals, which is less than the previous year.
Perfect. Thank you again, Khadija. So we have another question. This time it's about Salat Al Maghrib. It's for Ptissam. So what do you expect a downside for Salat Al Maghrib? And did you take into the consideration the impact of the fine that could be paid for your valuation?
No, Dunya, we have not taken into account the 6 billion claim in our valuation. Even if the fine is taken into consideration, it will actually not impact the valuation. It will not impact the target price, as it has no impact on the EBITDA. It will rather impact the net income. However, I would like to point out that we have taken into account this risk in our valuation parameters. So our beta is higher than usual, which explains the low target price of 102 dirhams per share. So we are rather cautious in our valuation, but we still think that apart from this legal risk, the share has strong potential and could return to more normative prices.
Thank you, Ptissam. I think it's very clear. So we have this one, a third question. It's about the banks. So that's for Iman. What explained the increase of Tijari Wafa Bank cost of risk in 2023? Thank you, Iman.
Thank you, Dunya. Well, this increase in the cost of risk is explained by the adoption of a prudent provisioning policy by the bank due to a moderate economic recovery. So the impact of sovereign risk coverage in certain countries where it operates, in particular Cameroon, and the negative effects of oxygen and the reliance loans, which are state-backed loans, are set up in the context of the COVID-19 crisis to support companies. were the causes of this increase in the cost of risk.
We have another question, this time again for about Maroc Telecom. So the question is about how much is Tisat Maghrid planning to invest in 5G for the deployment of the technology 5G?
So the 5G technology requires significant investments. In particular, the license to be acquired from the ANRT, the Moroccan regulator, which should cost between 3 and 5 billion dirhams, plus investment in equipment, which should require an overall budget between 10 and 15 billion dirhams for the three operators. For Maroc Telecom, Wana, and Orange.
Thank you, Baptista. So we have this time a question about the cement industry. So can you give us a sense of your outlook for cement demand growth and the competitive dynamics in the cement sector? My understanding is that there are new players entering the market. That's the question. I think it's for WM. Can you please answer?
Yes, so first, thank you so much for your question. Exactly, you are correct. In 2023, the Moroccan cement market was like at overcapacity. However, you have to know that with the anticipated recovery in 2024 due to multiple factors, just like the housing direct assistance and the infrastructure project associated with the organization of the 2030 World Cup, they should really revitalize the cement market and absorb all this overcapacity that we noticed before.
Thank you, WM. We hope we answered that question too. So we are waiting for 2 minutes for the other question. We have a question about Agdital. Please, so this is the following. Can you confirm the driver of performance for Agdital? What are the risk, downside, and please comment on the company competitive position. What differentiates them from other players in the private healthcare space? So it's a very good question. I'm going to ask to Wiam to answer it.
All right, thank you for your question. First, yes, the overall supply in the healthcare sector is already like low in Morocco. You have to know this, and it's due to the lack of supply from the public sector. Now, in the private sector, I want to say that the offer is starting. It's really starting to take shape and to be more structured with Actital actually, with this major healthcare player whose major asset is really two. There are like two major assets. First, the fact that it has like an extensive geographical footprint. As I said, they are like present in 6 cities with like 21 entities. And second, there is the fact that it has multidisciplinary establishments with a focus on the oncology side, which is making Agdital really special, and is giving it a huge weight in the healthcare in the private healthcare sector. I hope this is answering your question.